Alright, I had to re-record this, guys. For some reason, it just didn't actually play the sound, so I'm just going to recap what I was talking about. So basically, I was just saying I like to trade stocks that are between 0 and roughly, give or take, $40, and I just like to get them at their lowest point and sell them while they're high. So let's see what graph we can use here. Just pick a graph. I like the M graphs, the ones that look like M's. The M patterns are my favorite types of patterns because it's the most volatile and the easiest to actually read and actually dissect and go by. So for instance, let's say a graph like this. Let's say we came in the I don't actually like that one. See, that earlier video I did was perfect. I literally laid it out perfectly for you guys, but for some reason the sound just didn't play. Now I have to look for that graph that I used earlier. Alright, let's just use this one for now. So let's say it's 9 o'clock, you're waiting, or 9:30, the market opens, and this is all you see, just a straight resistance right here, straight resistance. Resistance means the line at which it stops and doesn't go lower or higher. So basically right here, and then it goes up here, and then it hits another resistance. A new resistance is about this point. So you basically want to buy at the resistance, because that's usually the lowest point, unless it goes lower. But usually the resistance is where it goes the lowest and it goes up again. So if you buy at a resistance, you sit and you wait and then you sell it off. That's how you day trade. It's about your entry point. If you buy low right here, you sell right here. So let's make an example. Let's say you bought a stock. Let's say it cost, I don't know, let's say it cost $1 for a stock, right? So you bought a stock for $1. Let's say right here is $1, and you bought, let's say, 50,000 shares. So you want to spend $50,000 on $1 stocks. And let's say you bought right here, right? If it cost you $50,000, great. It costs you $50,000. Let's say it goes up right here, and let's say you made $2 off of that, so it goes up to $3. Let's say. We're just making up a number, but let's say it happened. It's stuff like this happens all the time. But let's say it does happen. It goes up to $3, right? Now you sell your 50,000 shares. So times that by 50,000, and you get what? 150,000, guys. So you just made $100,000 in less than 10 minutes, all because you knew when to buy and sell. And that's how easy stocks can be sometimes. Obviously, you have to find the right ones, because not everyone runs like this or any other type. Let's look for another type of graph. Let's look for another type of graph that I would like to make a play on or would think about. It's usually the M's, so this one would be decent, because it's all about volatility. See right here. So this right here would be a panic buy, or this is where people panic. Let's say this is the morning. Let's say this is just a one-day graph. Don't look at the months or down here. Just pretend it's the day graph. And let's say right here, people are just panicking. So you want to be the guy that is waiting around this point to buy all these panic sells, because people are panicking from their position. So they panic, they sell, and you buy here. Now you're the smart guy, because now you bought when they shouldn't have sold. Now you bought what they sold, and you wait, and then you sell about this point again. But you don't know where exactly it's going to stop going up again. So it's kind of like you got to know when to stop. It's like gambling sometimes. You got to know when to get yourself out of there. So the guys that are greedy, they're the ones that end up losing money. The guys that are in it just to make profits and just keep it moving are the ones that survive. So there's a pattern day trader rule. You can only make 6 trades with 1 brokerage in a week. The way around it is you just get multiple brokerage accounts, and you fund all of them. So you can have as many as you want. You can have 6 brokerage accounts, and you can make 6 trades on all of them if you have less than 25,000 in those accounts. If you have over 25,000, you can trade as much as you want. So the goal in stock trading is to have over 25,000. So then you can just do whatever you want and trade as much as you want, no restrictions. So until you get to that goal, you got to basically claw your way to that goal if you don't have it. And once you're there, then you trade as much as you want on your favorite app. That's what I would do. And then you can also short trades, which we'll talk about another time. That's basically doing it the other way. We won't talk about that. That's just a lot. But other than that, guys, those are the types of graphs I like. This is basically a recap of the 30-minute video I put up. We're gonna do more of these and talk more in depth. But yeah, M graphs, guys. Look up stocks and look up their yearlies, their dailies, all of that, monthlies. And if you see a lot of M's, that's a stock that you want to be trading in. I don't know what day, you just got to follow the patterns, because most people that trade, they use the same stocks every day all around the world. So if you see a stock being traded, it's usually the same people in it. We're creatures of habits. We do the same things, you know what I mean? So if you see this stock, it's usually the same people doing the same things every day. That's why they call it patterns, because it literally follows a pattern. Let's say you look at a pattern from March of this year, and you look back to March of last year, or even 5 years ago. What you'll notice is the patterns are virtually almost identical. Not 100%, but it's very close. So what does that mean? That means people are trading the same stocks every day. That's what that means. So your job as a stock trader is to find the most volatile ones, the ones that run up and down the quickest and the most. You don't want a stock like, let's see, like this is alright, but let's look for something that you really like. Something like this. You see how it's like this the whole time? This sucks. There's no growth here. Like, you got growth here for a little while, but then it went down again. So a stock like this would not be something you want. You want the M's. You want the highs and the lows, because then you know you can buy and short at any moment's notice. See, like, this is beautiful. Huge highs, huge lows. That's what you want. Even this would be fine, because then guess what? Right here, look at this pattern. People just panicked all the way down. All these people panicking. You wait, and then somewhere, and then somewhere around this point, you would buy, and then you hold it, and then you sell somewhere around there. Obviously, the smartest people sold up there, but really the smarter people sold around here, because you don't know when it's going to stop going up. So that's really what it is. Stock trading is about buying low, selling higher than you bought. If you can do that, you can be successful. And you can really, I've seen many stock traders start with $500 and now they're millionaires, guys. But in the beginning, it's not easy. I'll admit, at the beginning, you gotta put up 80% of your account so you can make the profits. But then once you start making the profits, then you can start using less and less of your account, because your account is greater than it was. You know what I mean? But to get to that greater point, you have to risk more in the beginning. But once you get to 25,000, you really don't have to do it that hard. You can really just chill out a little bit and just trade smaller increments. See, look at this graph. This is crazy. This is beautiful. Look at this. You can buy around here, sell, wait, buy again, sell, wait, buy, and then wait, and then sell. You wait. You don't want to buy when it's high. You don't want to buy, and then it goes down again. You buy again, and then you wait. It does its thing. You might sell here because you're getting scared, but that's up to you. But then you wait, and it goes up again, and then you sell. That's how you do it, guys. When it goes low, you buy at the resistance. See right here, this line right here? This is the resistance. You basically want to study the resistance. This line right here. Study the resistance. This is the buying point usually, at the resistance line. So you usually want to buy around here and then sell up high. That's what I do. That's the strategy I've been using. Let's see. Yeah, you wouldn't want to use anything that looks like that. This is decent. Let's see here. I want to see TD Ameritrade stocks. TD Ameritrade stock graphs. Because I like reading their graphs. Yeah, see. Let's look for a decent one. A clear, concise one. Let's look for an AMC one. AMC. love trading AMC because there's a lot of volatility. But I'm not seeing like. Hold on, I want to see like a good graph. See, like right here. Let's see here. Oh, that's Yahoo Finance, but it's still AMC. But like, see how you have these, I guess these novas, supernovas. They're called. These are called supernovas when they go shoot straight up. This is what stock traders live for. So say you were to buy at this point, the entrance right here, the resistance line basically. So say you bought at the resistance. Now it shoots up. Guys, you're making so much money here, and then you can just sell at any point over here. It doesn't have to be at the highest point. No one would guess that. You couldn't. It's impossible to guess that. But if you sell around here, you can be a thousandaire at least, maybe a millionaire, depending on how much you trade. And then that's basically the goal. That's what you want to do, guys. That's basically the gist of what I talked about in the other video that was stupidly muted. See, and then this is a panic right here. You see right at the beginning of the day, people just panicked. So right here, you watch it. Say it's 9:30 in the morning, you see all the red. Right now you're watching. The resistance is right here. So you want to just keep watching. You don't even want to buy here. It goes up a little, but just keep waiting. Waiting. And then at some point around this resistance, you would buy in. And then you hold, and then sell here. You buy again. And then you hold and you sell. It hits the resistance again. You buy here. It goes up, and you sell at any point, guys. And then here, and then you that's 4 trades right there you made in one day, and you could have made countless amounts of money right there, depending on how many trades or how many shares you traded for. That's what it comes down to. But you can make a killing doing this, or you can just make a modest amount of money. You make what you want to make. It's up to you. If you just don't be greedy. You got to know when to cut losses. That's probably the most important thing about trading stocks. Knowing when you make a mistake. Knowing when to... you don't want to be right, guys. You want to get it right. So when you realize you're screwed up, like let's say you made a mistake. Where's that other one at? Let's use this one. Let's say you made a mistake. And for some reason, let's say you bought at this point, and you're like, oh, shit. So it goes up, and it starts going down, and you're back at your price, and it's still going down and down. At some point, you're going to have to say, all right, I screwed up. Let's live to see another day, and then just sell off and maybe lose a few dollars. But if you keep waiting here, you lose your shirt off your back, and now you're screwed. So you don't want to be that guy where you're just holding just to like see and wait, because it might not ever come back up. You always want to buy at the resistance. Find the resistance and buy at the resistance. Never buy higher than the resistance, because you're going to kill yourself. See, like if you buy up here, this is not the resistance. This is you just buying whenever you want to buy. You're not paying attention if you're buying here. But let's say you made the mistake. You got to know when to cut losses. You want to buy at these points, low points, lows, and then sell at higher points. That's what you want to do. Reading graphs just takes time. That's all it is. At first, I know it's hard. It seems hard. You see all these lines and numbers. It's like, oh my God, what's going on? But it's really not that hard once you just keep doing it. Open up a paper trading account. You can trade with, I forget the limit it is, but you could use fake money and trade on the market and find out how you do. Do that for a year. I did it for a year, give or take, maybe a little more, and then I felt comfortable using my own money. But use the fake money that they let you use, and then get comfortable with it, and then do it. I wouldn't just jump into it without trying it for fake. You do it on. There's plenty of ones online. Just look one up. Just look up paper trading accounts, day trading paper trading accounts on Google, and there's countless ones you can use. And then just do that until you get comfortable. Let's see here. Yeah, this is the website of TD Ameritrade, what it actually looks like, a smaller version. But yeah, you can see in the morning right here. Well, actually, I can't really see. It's hard to tell. But this is the low point. You'd want to sell around there. This is the resistance. The line right here, that's the resistance. You try to buy around that black line, and then you sell above it. As long as you buy a good amount of shares, you'll always make profit. But the key is buying at the resistance point. That is the key in making money on the stock market. People lose money all the time not buying at the resistance. They're buying at any old point. They're like, oh, I think I could make this work. They just jump in a position and then they lose money because they didn't buy at the resistance. Because a stock can change like that. Like you can buy at the high point and all of a sudden it just goes down the next 10 seconds and you're screwed. You're panicking. That's what happens to a lot of people. The stock can change like that. You can make $1 million in 10 minutes like that. Or you can lose $1 million in 10 minutes like that if you don't know what you're doing. You got to have the temperance and the smarts and the wherewithal to get the hell up out of these trades. Usually positively. That's what you want. See, like right here, a lot of graphs are like this. You buy here, this is a resistance, fine. And then you sell. And then you buy again at the resistance, and then you sell at any point you want. The profits you make, it's up to you. It shows you your profits on the screen as you're waiting to decide when to sell. So once you get to a number that you like, you can sell, man. It's up to you. You know what I mean? It's really up to you. So if you're like in your head, I want to make 500 a day, beautiful. You get to that goal and you sell. That's what you can do. Or you can be a little greedier and see if you can get a little more. But sometimes it backfires. That's why it's best to go in with a plan. You know, if you don't have a plan, you're just gonna just aimlessly buy shit and lose money. If you have a plan, like, okay, I'm making 500, 1,000 at the most, and then you know, all right, if after 1,000, that's it, because you don't want to lose money, because it could go down and change just like that, guys. But other than that, we'll leave it off right here, and then next time we'll go into TD Ameritrade and see what a stock is looking like live. And then we'll talk about what I would do at that point and go from there. But other than that, guys, thanks for watching. Don't forget to like, share, and subscribe.